The 2017 Bitcoin bull market provided over 100x returns as price rallied from under $200 to nearly $20,000. And when mathematically comparing BTC bull cycles, it looks like we could be about to repeat history. Today we're going to be looking at whether we can repeat the 2017 Bitcoin bull cycle and where better to start than the BTC growth since cycle lows chart we have here on bitcoinmagazinepro.com. So recently we've had some fairly choppy Bitcoin price action. We obviously made a new all-time high above $108,000-ish, and we've recently retraced to sub 90k. As I film this, we've rebounded quite nicely. What we can see here is just comparing all the BTC bull cycles. We can see we're actually, the black line here, following quite closely to the previous two cycles. We can see that the initial first Genesis cycle we had is probably out of the question now. It rallied exponentially in just a few hundred days, and we're well past that. So we can probably ignore that one for now. The next is the double peak cycle, and we can see we've actually already surpassed the length of this cycle. So maybe we can still factor in that we could see a double peak this cycle, but obviously times have changed and it may look a little different. But really we want to be focusing on the previous two cycles to give us some indication of potentially how the remainder of this bull cycle could play out in terms of price action, as well as maybe looking at what price and when we could see a BTC peak. What we can see is in these previous two cycles, they did top out at incredibly similar times, both the 2017 and 2021 into 22 cycle. The 2017 topped out after 1,068 days from its cycle lows, whereas the 2021 topped out after just 1,060. So very close indeed. And currently, as I film this, we're 779 days into this cycle. So potentially best part of a year remaining. So what we can actually do is compare these two cycles to our current cycle, and we'll also compare the double peak cycle as well to maybe get a little bit of insight into the correlations with these cycles to see if we are actually copying the 2017 price action, and this should be our basis of how we can anticipate the remainder of this cycle to play out, or maybe we should shift our focus to a different cycle. So what I've done here is collate all of the cycle data and looked at the MVRV Z-score. So the MVRV Z-score looks like this, and rather than just comparing Bitcoin price action, I thought it'd be handy to compare a metric like this, an on-chain metric, so we can get some understanding of the correlation, not just in price, but of investor behavior and patterns in the psychology that we're seeing when people are taking profit, when people are accumulating heavily. So if we can see some correlation between not only price action, but the MVRV Z-score as well, then that gives us even more clarification that maybe we are following a particular cycle. So what I've got here is in this column, we have the first double peak cycle, 2011 to 2013. Here we have the 2015-2017 cycle, 2018 to 2021 here, and our current cycle today, where we started with a low of around $16,172. And we can see the price and MVRV ratio of all of these cycles. So what I can do is just scroll down. And as we can see in this first cycle here, we stopped out after just a few hundred days. So we've actually surpassed the length of that cycle already. We can still compare the correlations between these cycles, but only up to the date that it allows. We can scroll a bit further and see where this current cycle ends, well, up until the point of data, which is where we currently are now, around $95,000 following our retracement for our new all-time high above $100,000. The next two cycles we can see come considerably lower, as we said, best part of the year until we reached them, but did top out at really close times. It's pretty amazing how close those two cycles topped out. What we can see here, if I just zoom in nicely to say 200%, the first cycle has correlations of price of about 0.7. Now this is on a -1 to 1 scale, -1 indicating an exact inverse correlation. So as one moves up, the other always moves down. And a score of 1 would be a perfect correlation. So they both move up and down at the exact same time. You can almost view these as percentages. So we can say that 0.7 is almost a 70% correlation with this first cycle, which is actually a pretty strong correlation considering how different the market dynamics have changed in over a decade since that cycle. And what we can see is even more surprising potentially is the correlation in the MVRV ratio is a 0.83, indicating a very strong correlation between the investor habits between those two cycles, which does make sense kind of. If we look back to the chart here, we can see after we set the peak in March of last year around $74,000, That could almost, I guess, be seen as the first peak in a potential double peak cycle where Bitcoin rallied exponentially, maybe a bit earlier in the cycle than many were anticipating, before a sustained cool off period with a little bit of drawdown. And now we're beginning the second phase of this cycle. So the price action doesn't match exactly, but it is interesting to note that the investor behavior is still quite closely related there. Next, we have the 2017 cycle, if I just scroll along here, which currently is by far the most correlated cycle of any we've had with our current cycle to BTC, with a current price action correlation of 0.92, which is an incredibly strong correlation. Just think, a cycle that happened nearly 10 years ago. Well, it did start 10 years ago, up until about 8 years ago. It has a 92% correlation with price action that we're seeing today. This really outlines the mass psychology of investing, of data, of behavior and patterns. It's amazing that even as everything has changed from a almost exclusively retail driven rally we saw then to now institutionals and sovereign states accumulating BTC, it's all acting out in a very similar fashion. And the MVRV ratio still has an incredibly strong correlation there of 0.82, but interestingly slightly lower, I mean pretty much exactly the same correlation as the double peak cycle we saw before that. And the next would be our most recent cycle, that 2018 to 2020 wrong cycle, with a 0.75 price action correlation and a 0.54, by far the lowest MVRV ratio correlation. And that's because we did have that initial run up due to the plus token Ponzi scheme before the COVID 2020 dump. So some pretty unnatural, we'll say, influences on price action there. So it's not surprising that that is the least correlated currently, and that cycle did have that double peak rounded top, which hopefully we don't see again, as it does kind of throw a spanner in the works for quite a few investors. But as we can see, yeah, we are still closely most resembling the 2017 cycle. And what's interesting to note is we did this type of analysis, very similar analysis to this, in, let me see, October of 2024. What we can see is the same correlations here. So the 2013 double peak cycle, we can actually see that that correlation has reduced quite substantially in the past few months, which I guess isn't so surprising considering we've surpassed the length of that cycle and we haven't seen this massive exponential bull cycle peak yet. So it does make sense that that has declined and the MVRV ratio has remained pretty constant. The 2017 cycle has actually increased in correlation. It might be a bit hard for you guys to see, but the price action correlation when I previously filmed this was 0.89 and the MVRV correlation 0.79. So 89 and 79, and now it's 92 and 82. So an increase in correlation. Not only are we most closely resembling this cycle, but every single day we act more and more like this cycle. And then the previous cycle, 0.75 and 0.54 is our current correlations. And, wrong tab. Back here it was 0.54 and 3.4. So again, we are increasing our correlation to that cycle as well. But it does make sense as we're entering kind of this exponential phase of the rally, post-halving, where we have this cool-off period, which lines up nicely with our next chart, which is the bull market comparison, specifically starting from Bitcoin halving points. Now, again, we can probably remove that 2013 cycle because it's just not too similar. What we can see is our current cycle here, which is the purple one, is still closely following this 2017 cycle, incredibly closely actually. So not only from the cycle lows, but also from the halving, where we have this long cool off period before price finally starts ticking higher and hopefully now enters the exponential phase of the cycle. As we can see here in the previous cycle, where we had this first rounded top before a drawdown period before the second double top. So hopefully we do continue to follow this 2017 as just a long, slow grind up, probably increases the upside potential we have for this cycle. What we can also do is go to TradingView here and see on the chart how that might actually play out. So I have the 2016 halving event here and the 2020 halving event here and our current one in the 2024 cycle, just for some reference. And what I've done is got the price action fractal of this 2015 to 2017 cycle to just overlay from our cycle lows to peak to see how that currently looks. So what I can do is just add this on here. So we can see this orange line represents that 2015 to 2017 cycle. And it is incredibly interesting to see that we have, at this point in the cycle, almost the exact same percentage returns as that previous cycle. We had this initial run up before a period of consolidation and then a big run again before a little bit of a drawdown period. And if I just add on this line here, this dotted line here, that indicates when the halving occurred in that 2015, 2016, 2017 cycle. And again, we can see these were occurring at incredibly similar periods of time during this cycle, just a few days apart. If I grab from there to there, it is 25 days, less than a month apart for those halving events to occur from our cycle lows. And from that, the price action remains incredibly similar. So if we are to continue following this, we can maybe see an extended retracement into the end of January, which I guess could align with some volatility, especially considering the political situation in the US, before a massive exponential rally that lasts throughout the majority of 2025, leading prices to about $1.5 million. So is that possible? I don't really think so. I don't think we're going to go to $1.5 million this cycle. But if that is to happen, and we do see a peak alongside that cycle, it could occur in around October 2025, maybe slightly muted down if we just pull that. Maybe it looks something a bit closer to this. But a peak in Q4 2025 also does align with pretty much every other metric that we're seeing. If we look at something like the Pi Cycle top prediction chart, which does change every day. If I'd filmed this a couple of weeks ago, it would probably lined up almost to the day. But currently this is predicting a cycle peak on December 1st, 2025. As price action has had a little bit of a cool-off period, if we continue to see some rally, then this date's going to get closer and closer to our current date. So it is interesting to see, not only from correlations, not only from on-chain data in the MVRV and market cycle charts like this, but everything is kind of looking like we could continue to follow the 2017 cycle for the remainder of this year. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, the current Bitcoin bull market is currently most correlated with that 2015 to 2017 bull market, with a price action correlation of 0.92 and an MVRV ratio correlation of 0.82, indicating that we're not just following the same price action trajectory as we did all those years ago, but also the investor behavior is also incredibly similar. And especially considering the respective halving events occurring at almost the exact same time following that cycle lows. And now we're even following that cycle even more closely, as we can see from the analysis we did a few months ago to today. We're getting even more and more correlated to that 2017 cycle. And while we are following that, 100x returns almost certainly not going to happen this cycle. We are seeing diminishing returns in a $1.5 million Bitcoin. As much as I'd love to see that, probably isn't likely. Although we can say an October 2025 peak doesn't just sound reasonable, but I read that wrong. Doesn't just sound possible, but it is actually very reasonable. Not just looking at a correlation perspective, but looking at market cycle and on-chain data as well. Q4 2025 with a similar trajectory to 2017 cycle would be great for the outlook of the remainder of 2025. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on potentially following the 2017 cycle throughout the remainder of our current bull cycle. Do you think that is a possibility, or do you think that we're maybe going to do something completely unique and different than we've ever seen before in Bitcoin? As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.